And joining me this week, Mike Mangan, a portfolio manager at 2MG Asset Management, the Australian senior business columnist John Jury, and Marcus Padley from Patterson Securities, and author of Marcus Today newsletter. Thanks, welcome to you all, gentlemen. Now, listen, I suppose another thing the Reserve Bank could do is actually cut interest rates as a way of targeting the dollar. They don't usually do that. They tend to go for the interest rates economically. So where does the market think the interest rate futures are lying at the moment?
Well, we've got an RBA meeting on Tuesday. I don't think anyone's expecting a rate cut out of that. They might get one the month after that, and some brokers are expecting 2 cuts by the end of the year. But really, you know, if anyone thinks they can manipulate the Aussie dollar by moving interest rates, be it the government or be it anyone, they should ring Nigel Lawson and George Soros and just realise it's completely fallacious to believe that you can do anything with your own currency. Your currency is surely a reflection of the state of your economy versus the state of the economy of the other currency.
No, but that's the point that Warwick McKibben's making, is that sometimes it's not to do with economies, it's to do with portfolio flows and money sloshing around chasing safe haven AAA debt as Australia's is. So it's a kind of not an economic issue.
Yeah, well, and I think he's got a point, and I think maybe I think he's very smart. There are a lot of people in the market think by the end of this year that the Reserve Bank will maybe cut the interest rates by, as Marcus said, 1 or 2 times, and the primary reason for that will be to take a bit of pressure off the dollar. And I think we've got to remember that the whole game right now for the central banks is to try and sort of hold things off and hope the economies around the world improving. That's what's happening in Europe, what's happening in America, and it's a game of just trying to keep liquidity and just trying to keep the balls in the air, just hoping they don't land too hard.
Yeah, but you're comparing Australia versus Europe, which is going into a multi-year recession, the US, which is struggling to bounce. And why do you think the currency's up and will stay up? Because that situation isn't going to change unless the resources sector implodes, which is perfectly possible.
Yeah. Which is happening.
Which is happening, that's right.
But Marcus, our interest rates are 1 or 2% higher than comparative interest rates in Europe and the US. That's a big factor in why our Aussie dollar is so high.
Sure.
And I think it's the single biggest issue in this economy at the moment is the Aussie dollar.
So do you think the Reserve Bank should cut rates?
Absolutely. They should have been doing it all year. I mean, we've got, 3.5% interest rates. In Canada, they're 1.5%. Yeah. I mean, there's a huge differential.
And we've got inflation below the RBA's target band.
Absolutely.
There's no inflation pressure
What
anywhere.
are they waiting for? I don't know what they're waiting for.
Well, they're obviously worried. They must be worried about that inflation will start. They actually feel that, I think the Reserve Bank thinks and has said that interest rates here are very low now. You know, they're lower than they normally are. And
they're lower than the last 5 or 10 years. I think they use the history, but they're not comparing. The relevant comparison is what interest rates are in overseas countries. That's what's relevant today.